How's it going, everyone? Welcome to the weekly trade review for the week ending in 2/17. So February 10th, or sorry, not February 10th. February, what week is this? February, I guess 17th to the 21st, although we had a holiday. Hope you guys had a nice week. And I'm going to talk about first the market, what happened this week, and then I'll get to the breakdown of the trades. So quick summary. I had 11 day trades, one swing, one earnings time spread, and a trade related to the earnings time spread. So sort of two trades there, and one open position. So 14 trades this week, and all of them really came, or most of them came, I should say, in the back half of this week on Thursday and Friday. Very inactive Tuesday and Wednesday. So market-wise, let me clear up this chart here. We had a holiday shortened week. Friday was a dead day on Valentine's Day. Post-holiday, very low volume, light rally, slightly poked to the all-time high. Get a little end-of-day pop. Very weak rally the next day. We had a bit of a crackdown, and then we got some of the gains back, and then a really nice bearish trend day on Friday. So very interesting week. Let's look at this M5 chart and get our bearings. And clear some of these lines out of the way. Okay, so here is Valentine's Day. When we open on Monday, super low volume, chunky price action, total garbage. There's this pop low where we break through the low of the day, triggered all these sell stops, and then we snap back in the range. And the snapback has some fuel to probably trigger a little bit of buy stops and some gamma squeeze to the upside, make a new all-time high. Kind of an odd move to the all-time high, very likely. The next day we have a gap down, small gap down. We open within the prior day range, and we churn up. We actually break through the all-time high. We get a dip, dip, dip. We get another move with not a lot of follow-through. This is a really wimpy move to an all-time high. It just feels like we broke out, but there's not really a lot of strong volume and strong momentum to trust, and very weak price action overall. On Friday, we get this gap down, and we get this nice move lower, and that cracks through the prior day low and the low from a couple of days ago. We get this long kind of tail, and you had a chance to get short over here and see if we could poke through the low of the day. But since we dropped hard and fast, and this was a very tall hammer, we really had to see this crack down pretty quickly. There was also a pretty major level here. I'm going to try to clear this chart so it's not as crazy. Just going to go to the 5-minute chart here. And I am going to hide that. Okay. So we had this AVWAP come into play. This AVWAP was from the low of this range. So if I go to the D1 chart, it's pretty much the low from this candle that the market had been above. And so that was my line in the sand when, if we broke that, we had a chance to get to the short side. So the market had stayed above that level over here. And maybe I'll make this, because all my AVWAPs are blue, let me make this like pink right now so it stands out. So this pink line, is what we stayed above. We tested that level, so I wanted to see the market clear that level. And when we started chopping around there, I knew that it wasn't likely to break. So that was one thing I was watching out for on a technical basis. The other thing, just on a price action level, even if you ignore all this chart on the bottom here, you can see that we had this low. We formed a higher low double bottom here, had another pop up. We tested it again, moved to VWAP, another test, and then we kind of managed to churn up higher. So as soon as I saw this double bottom here, and I saw this low of the day start to hold for a couple of bars, I felt comfortable getting long, knowing that this low of the day is probably going to hold, and I'm using that as my stop on SPY and my stocks. And you could probably trade from the long side for the rest of the day after that. On Friday, very different characteristic that's important. Flat open. See the nature of this move where we have lots of steady consecutive candles. The price action's okay up until this point, but we have some nice volume. And there is some overlap, but not a ton of overlap. I think this is a pretty decent move lower. We break the low of the day pretty early, right, in the first hour, which is usually what you need in a trend day. Now we come back up, and we try to test VWAP over here. We get above it here, and then another smack down from here. And this is actually where I took a SPY short. I'll get to that later, but I cut a couple of short trades over here, and the market had really nice flush all the way down to 600. And after that, kind of died off for the rest of the day as it digested all the gains, went sideways. Sellers are keeping a lot of the market. There's a lot of buyers at 600 and the 50 SMA. So we got this sideways choppy price action. All right, let's get into the trades. So I'm going to start with my swing trade first, which was from last week. So on the close, or not on the close, half an hour before the close, I took a SPY 609, 604 PDS for $1.42. So I took it kind of right around here. And I was looking to see if the market would kind of stall and maybe, drop down, get a swift rejection from the all-time high that we kind of poked above over here. We didn't get that, and then we got this long red candle over here on Tuesday. And I was giving it a chance to see, okay, well, this is probably going to trigger some sell stops, but let me give it a chance and see if it's going to go down lower. And then when I got this nice green candle, I exited out of the trade for like a 10% loss, so very tiny loss. Nothing very crazy at all. Pretty much entered somewhere here, got out somewhere here. So wasn't thinking about that too much. I could have given it some more time, but I decided that when I'm not really getting the move that I wanted to see in a certain time frame, I'm going to scratch out of the trade and perhaps re-enter at a later point in time. That was my SPY PDS, pretty much a non-factor. On Tuesday, I'm going to go through this actually in sequential order because it might make a little bit more sense. So on Tuesday, market kind of having this weak move up, and I took a short on Sedge, which I will explain right here. So we had a big gap up from earnings. Sedge had sold off some of that gap, come back over here, hit VWAP, started to reject down at this level, tested the low of the day, another pop up, and then it started to break down through the low of the day over here. So I really liked Sedge, and I took a day trade short. I couldn't short the shares, so I took the weekly 1950, the weekly puts, 19.5 puts for 83 cents, and I took it at around 307, so in the middle of this candle here. Now the mistake I made is that there was actually the prior days a VWAP that came around into play right here, and I missed that. And I saw that later after I entered the trade. So because I realized I'd missed that TA level, I set a target to maybe scratch out of the trade. So I took a small loss at 0.73, so a 10-cent loss on that. About 15 minutes later, right over here, I had a chance to scratch out of the trade and actually would end up being a winner. But if I kind of missed something here, and I felt like I wasn't super comfortable. I don't know where the market was going to go, and to know what the stock exactly was going to do on an overnight basis, and I missed something on an intraday basis with not a lot of time left in the day. So decided to take the small loss there. So started off the week with 2 very tiny losses, nothing really crazy. Just not really doing a whole lot because didn't like this price action and didn't like that price action. So now we get into there we go. Now we get into some of the day trades on Thursday. And let's start with this first day trade here where I took SPY 15 shares short at 609.03. And this is the setup that I saw in SPY. We got this strong move lower. We moved to VWAP. So I saw these tails above bodies. I like what I saw. We also had this 1 OP bullish cycle starting to crest. Volume it was strong initially here, and then it really died off over here with heavy volume. So I knew there was a chance that we at least come close to test low of the day. Had a chance to take maybe $1, $1 to $2 anywhere in this move. Even 15 points on the S&P would be pretty nice. So I took it short on this candle right here at 609.03. And we had a nice leg lower over here. This bear cycle was starting to produce. And I was planning to take some gains at the low of the day, but I was watching to see if we have a chance to crack down over here or not, or if we kind of stall out. And we started to stall out over here. So got some organized selling to the low of the day, and then we had a key bar that closed above that 8 EMA. So when I saw this price action over here, I got out of the trade. So I took gains at 608.18, so a little less than $1 per share. Not a bad trade. Could have taken some profits into strength, or potentially could have held for a move somewhere here and gotten a little bit more meat on the bones, but wasn't too upset with a trade like that on a day. It was a nice small little win over here. The other trade I took on that day was Carvana. First, here's the D1 on Carvana. Massive crackdown post earnings, very heavy volume. Now, it had the 50 SMA below it, so wasn't crazy about taking this as a swing trade, but there is some day trade potential here. Let's look at this M5 chart. So we can ignore this pink line for the AVWAP Q. That wasn't there. It sets after the stock closes for the day post earnings. So Carvana had this very strong move, lots of steady candles, and then it was compressing at the low of the day over here. Now, while the market was bouncing up, Carvana was flatlining. So I knew this had a chance to come over here and test that 50 SMA, which has probably either moved up or stayed the same. But it's going to come and test that 50 SMA. So when I took the SPY short over here at 10:30, I also took the Carvana short around 10:30, and I took the weekly PDS at 242.50, 237.50 PDS for $1.75, and the SMA was below that. It was like 236 something. So my PDS was structured that the SMA was lower than my short strike, and we got a little pop over here. And the other thing I knew that is that this is a very strong trend, so I didn't have to wait for the compression break to end. It's most likely going to break lower, especially because I have a strong trend in the market. So I have a very, very confident the market's going to go lower and the stock is going to lower, so I can get an entry before this compression break. That's the first thing. The second thing over here is that once this breaks compression, the risk reward for this trade is going to be awful. This compression break is really going to be the meat of my move, and I can't afford to enter over here because I'm way too close to this SMA. So because of that, I know there's a chance for it to bounce to VWAP. In the absolute worst case scenario, this goes up over here, I will have to take the loss. So I decided that a PDS works pretty well in this scenario, and I took that 242.50, 237.50 PDS for $1.75, as I mentioned a little bit earlier. The plan was to take gains at the SMA. This had a chance to get to $3 if it hit the SMA. And if it hits a strong bounce to VWAP, I'd take the loss, which would be somewhere around like 68 cents. So we had a little pop over here and tested the 8 EMA, and we got the long red candle breakdown at 10:45. And then at 10:50, we got this nice little tiny little green doji, and this is when I decided to take gains because we were very close to this SMA. And I felt that I had a target out for $3, and I think it hit like 293, so it barely missed it. So I missed that order slightly, but I ended up taking gains here at 275. The bid-ask spread was a little bit wide. It was moving around, so 275 would be a nice win. Get in and out of the trade, and I could see if it sets up later in the day. And that was a nice win on Carvana. So it was interesting because there's a lot of other stocks that had not as limited downside, I would say. But I did enjoy finding a strong trend, just getting in and out of it, grabbing a quick chunk on that move, and moving on to other stocks. So that was Carvana. The other trade I took was KKR. Let's look at this daily chart. Now, kind of choppy, but pretty bearish. We have this this double top. It was a higher high, so not as bearish, but we broke through these lows here, these lows here, these lows here. So a lot of these lows on pretty heavy volume, a lot of selling after the earnings, and we've broken through some of these upward sloping trend lines and probably some old AVWAPs that are probably coming into play around here. And that's kind of one thing I've noticed. I don't even know the chart, so let's look at the chart right now. But I'm willing to bet that those horizontal levels is where those AVWAPs will come into play for KKR. Yep, there you go. The price action will usually reveal it. So I got one from this prior high and one from this low, and over time they tend to converge. This all-time high acted as a ceiling. This gap provided some support. So look at this gap over here. These AVWAPs do coincide with the gap fill pretty well. So just another scenario of TA lining up at this level right here. So it broke through that level, and it had room to that 200-day SMA. Let's look at this M5 chart. So we start off the day, massive selling, super long red candles. I like it, but it's made a pretty long move. Also on a shorter term basis, if I look at the M30 chart, you can see how the stock, it was in this compression. You can also see that on the daily chart where 1, 2, 3, 4, 5 days, kind of in compression for a little bit. So we had a strong compression break, which I like seeing. It means that it didn't make a massive move yesterday and that I'm chasing that move, which is a little bit more likely to fade. I knew that this move had a little bit more staying power, given that I had this M30 compression. So market again bouncing up. I'm looking for stocks that are hugging the deck. Here's KKR, and then we get this long break, this candle right here. I miss my entry at 133.44, so I get a worse entry at 133.15 right over here, and then this becomes a green hammer on some decent volume. So I'm in this situation here right now at 1040. The only thing I have going for me is that I know the stock is weak and then the market is weak. So I have both on my side. I have no reason to panic out of this position just yet. Test the 8 EMA, and it holds the breakout of this compression level as well as the top of this long red candle. I see the price action is getting mixed over here. So I'm kind of cautious. I want to see this low of the day get broken pretty quickly. And then we get this break in a couple of candles later at 11 o'clock. Let's fast forward a couple bars. So here's the market at 11:10. And then here's KKR at 11:10. It looks pretty good, but at this point I'm thinking, okay, well, the market might have put in a double bottom over here. And KKR, it did move lower, but I don't love this price action over here. So I'm going to get out of the trade, and I scratched out of the trade at 133.12. So didn't take much off of this. If I had an exit over here or even an entry over here, there's some money. There's a whole $1 to be made on this trade. But I missed my entry on this guy. Probably somewhere up over here. And that resulted in me scratching the trade. And the main reason was that I wasn't quite sure where the market was going to go from here. Didn't love KKR as much. Ended up being the right decision. It stalled over here. I had a couple of chances to get out, so I had a chance to scratch out of the trade until it looks like 12:20. And after 12:20, did not have a chance, or maybe one more chance over here, 105. Yeah, a couple of chances to scratch out over here, so had some time. And the market took some time as well to digest some of the selling pressure before lifting up higher. But got out of that one and didn't really think twice. Looking back, I think I maybe flipped probably a little bit too hard on this action over here. It probably needed a little bit more. Given this heavy volume selling, it's going to take a little bit more time to resolve, and we're probably going to see another test, another retest of the low of the day, and rather than a straight shot up, it's going to be a little bit more janky before it starts to turn. I think that's an improvement I can make on my part. Okay, so in the situation now where my bias is flipped to from bearish to neutral to maybe mildly bullish, and I'm looking for strong stocks. So find AGI. I think Dan called it out earlier in the chat, and I liked what I saw over here. Obviously, you can see where this stock might be going. Super strong price action. Market's going down. This stock is going up on massive volume. The price action is decently organized here. There is some overlap on these candles, but it's looking pretty good. So at the close of this candle at 11:05 or 11:10, I entered right over here at 24.19 with a little bit of follow through, and then the stock kind of flounders around here. Actually, I accidentally entered this trade with double size rather than initial size, so I scratch out of that double size and I'm running a normal position. Now the stock starts to pull back. The volume's looking a little bit heavy over here, but I'm not crazy worried. The only thing that has me a little hesitant was that there were these high plus trend lines that were coming up on AGI, and if I look at the chart, these are ones that could be pretty valid. They're not, something like here or here. They seem pretty valid to me. And these are balanced trend lines, by the way. So we didn't quite clear them, and I wasn't crazy about taking it, but there's two things I had in my favor. First, these high plus trend lines typically aren't super strong, and this wasn't like a situation where we had a high plus trend line with 3 touches, kind of equidistant, very orderly, defined channel, sort of a moving channel. Not you could draw it, but I'm not really super sure how strong this level of resistance is going to be. So I had that, first of all. Second thing is that we had a ton of strong action over here to get to this point. And third was that if I was starting to be neutral or bullish to the market, I could expect a tailwind on the market coming up in some decently soon, right? If it can start to get above VWAP, get something going, then I have a tailwind to break above. So because of all of that, that's why I decided to not scratch out of the trade and take a move to VWAP. And I figured, all right, if it can hold VWAP and probably this pivot low over here, then we have a chance to get probably at least test this level again. I can scratch out of the trade or even break above it, and I can start to think of some profits. Now, I was on alert when we got a poke over here, and then we started to get some follow through down over here. So once I saw this candle, I knew that the trade was over. It was getting rejected pretty hard. And at 12:25, the market was moving up. So it's really losing its relative weakness here. There's a ton of selling coming into the stock. And I take my exit over here at 23.66. So take a full loss in this size. Totally, I'm not super mad about it because I'd won a lot of other trades, and 2, I was aware and I kind of made the decision. In hindsight, I could have said, well, I missed this high plus trend line. Maybe I should get out. Sometimes it breaks. Sometimes it doesn't break. That's something I'm going to kind of evaluate in the future. Interestingly, though, after this long candle through VWAP, you see how we got a test to VWAP over here. And luckily, I didn't get a exit over here. I got a couple cents better exit, and even a chance to get maybe another 10, 12 cent exit over here closer to VWAP before it really started to sell off after that for the rest of the day. Very kind of steady selling. And continued that on Friday, although it kind of had found some support over here. So I think it will probably still work out on a swing basis, but on a day trading basis, that's when I had to get out because it's a pretty choppy stock. All right, so that was AGI. Next trade I took on that day was PLTR. Now, PLTR had a red candle the day before on something. I tried to look at some news on Trade Exchange. It wasn't anything crazy. It had some follow through selling the next day. Hit this gap, which coincides right around the $100 level. So we have gap resistance plus psychological resistance at $100. Or sorry, support, not resistance. My bad. So quite a bit of stuff going on there. So we get this move, we get this leg down lower, we get this kind of snap back over here, and then we get this lower or higher low, and we break a new high at 12 o'clock right over here. Look what the market does, right? Market sells off initially. It hits that same low, or it makes a higher low, but kind of pretty much at the same level. Whereas PLTR is starting to gain some relative strength and some nice orderly consecutive candles. The volume is good. And what I'm thinking here is that long-term dip buyers are going to be rushing to buy PLTR at $100 after this price. They're not just going to throw in the towel on this guy. So I have some tailwind on the stock for sure, and I'm very close to some major support levels. So we poked at this gap, and we didn't spend a lot of time below it. We kind of snapped back into the range pretty quickly. So I have VWAP to lean on, I have the gap to lean on, and I have $100 to lean on as psychological support. So when it broke this high, I knew that we are now in an uptrend phase, and I could ride the stock out to that point. So I started position here at 102.63. So I got in at a nice little price over here. If I look at the market at 12, yep, we got a tail. So we're starting to base out over here, and we're not able to make a lot of headway. So it's more likely that we're going to start to shoot up. Now PLTR comes in, test VWAP, starts to grind up higher. When I see this action at 1240, I added, so I now have a 1.5x position on this guy. PLTR started to grind up higher. We got this pop. Now I knew that on these grind pops, I either want to take profits in the pop, but I don't want to add on the pops. I want to rather add on the pullback. So added another quarter position here at 104.08. Let's pull back to the 8 EMA. And then when I got this candle right over here, added another quarter. So now I have 2x size at 104.58 because we have this weak pullback, nice key bar off of VWAP at 240. If we look at the market at 240, we're starting to get above VWAP over here. We're holding this level, and we're starting to make some higher highs and some higher lows. So the market's in an uptrend, stock is in an uptrend. My goal, my plan of this trade is to take profits near the high of the day. So when I come over here and I start to see these tiny candles near the high of the day on light volume, especially when the market is starting to flatten out over here, I'm thinking this is not a bad time to take some gains, because I don't know if we're going to get a red candle here or if we're going to break through and keep going up. So at this point, I started to scale out. So I took 20 shares, then 10 shares, then 10 shares. So I'm just slowly scaling out of this trade at like 520, 530, 105.20, 105.30, 105.40. So just scaling out of the trade over here. My original target was 105.90, and you can see that it eventually would have hit that position. So had I just done nothing, it would have hit my target. I'm still debating on what's the best way to do this. Should I scale in? Should I scale out? Or should I scale out? Should I just exit all at once? Should I leave a runner? I don't know. Ends up breaking through that high, and it actually hits the prior day VWAP right over here, and that acts as a little bit of minor resistance for the day. So all in all, it was a really nice trade on PLTR because I was able to get in a trade here and just stick to a nice steady grinder for the rest of the day that had nice volume, orderly price action, near some long-term support. I'm just buying a dip on a very strong stock. It had its relative strength established, and it was making a series of higher lows and higher highs. So ended up being one of my best day trades because I was able to add to it. The other trade I took on Thursday was CELH as an earnings time spread. So let me just look at the setup for this guy. It exceeds earnings 20% of the time, which is about the tip end of what you want to do for an earnings time spread. The expected move was $3.55. The average move was $2.19. Ivy crush of 183. So typically I'll take lower risk earnings time spread setups here. I mean, even though 20% is not crazy, I personally like something like, 13%, 50%, something less than 10%. But because the Ivy crush was so high, it warranted that move. So after hours, CLH went down, then went up, looked kind of choppy, so I figured I was in the good. And then there was some takeover news or not some takeover news. They had some M&A news that they're going to acquire some company. Stock shot up like crazy. So actually, because it shot up really hard, I knew that after hours, my spread is probably toast. And I took some shares actually at $34. So let me look at this M5 chart because that's going to paint a little bit more of the picture here. So this is the initial move. Started out down, then up, and I'm thinking here, all right, this is great, right? Non-reaction, nothing crazy. Stacked green candles. And I enter long somewhere here at 34.30. I get an entry close to the 8 EMA after the strong move because I missed this initial move here where it's like you could get long when it breaks this candle, but to be honest, I just don't have a lot of confidence trading these after hour moves. There's a ton of volume, so I guess this is some nice price action. But there's also an earnings call coming up at 6 p.m. And that was a result of that call. So I didn't know if that was going to create any sparks. Just kind of hard to say. If I'm just looking at this technically speaking, you could enter on the move here and then take some gains over here, and you could chip away at this earnings time spread. The other thing, too, is that when it breaks this level over here, you could ride it up and take some gains into strength. The interesting thing about CELH was that, so where it stopped over here, this 36.20, there is a AVWAP from a very long, from this high all the way back in March of 2024 that's coming into play, and actually hit that AVWAP pretty close here post hours. It hit a stop at 36. The other major factor was the IPO AVWAP, which came into play at 31.87. So here is, you can see I kind of drew these lines over here at 31.87. So it came into play somewhere over here. And again, I wasn't sure how this is going to react after hours or not. This is also earnings TA or earnings, reaction. So how much of the TA is it really going to trump? I'm just going to bias that price action volume kind of above everything else, to be honest. So here I was, and I just took a couple shares overnight, swinging that. Next day, stock comes and it drops, and I take a 50% loss immediately on this drop. The reason I did that was when an earnings time spread has a massive move where it exceeds the earnings, it's very unlikely that it's going to snap all the way back. It's probably going to stick. And so this first initial contra move, I like this red candle here, but I didn't know what was going to happen. The other thing, too, was that we're at the IPO VWAP that we opened above, so I thought we could see some support at this IPO VWAP, and I just wasn't going to play around. So took the 50% loss on the open, and pretty happy with that. Ended up being a great decision. Hindsight is 2020. Ended up being the right time to get out, and instead of taking 100% loss, I cut my losses short and got out of the trade. And I really take a lot of pride, I think, in getting out of a losing situation for more than I should have lost. It's kind of like if you play poker and folding a hand, folding a good hand and avoiding a monster hand, and you just don't let them get a lot of chips. You're avoiding danger and not taking a big loss, which is one of the biggest ways that you can hurt your profits. So now I'm in this position. It kind of snaps back up over here, and the market is moving down early on Friday, right? It's selling off, but CELH is holding its own. So I figured that, okay, well, it's holding its own, it's starting to move up over here, 1045, 1050, right, when the market's starting to light up higher. So I figured, well, okay, this is a pretty strong stock. I also know it's an earnings stock, so it's going to kind of ignore the market. I can stick with it and most likely try to scratch out of my shares at the high of the day. I don't know if the market starts to get more bullish, then maybe you have a chance to break through. Market ends up being bearish. And I end up getting the scratch at 1140, which is right over here. 1140. I'm gonna order out at $34, so I scratch out of the trade at $34, and I have a chance to actually take a tiny profit here, but it's so hard to snipe that in. I mean, pretty much have no chance. So scratch out of those shares and feel pretty good about how I manage the spread. SPY ended up having a bearish trend day, and again, this is some heavy volume, so even a stock that has earnings, it's going to get dragged down a little bit, and since my entry price is over here, not over here, going to be in the heat, don't want to have to worry about that. So that was CELH. Let's look at some of the day trades I took today. So first day trade I took on Friday was J&J. And this is a pretty early day trade for me. J&J is a pretty strong D1 chart. Nice head of steam, broken through the SMAs, had some room to this high minus trend line at 163. Like J&J. And the reason I took it early was actually what happened on the M30 chart. We had this big move up and it spent the entire day compressing and holding these gains. And we broke that compression very early in the morning. So I figured that on that compression break, I think I took it right over here. Yeah, at 10:05. Or sorry, I took it at 160.63. Took it very early because I figured that this is showing some relative strength in the morning. 950. Market's moving down lower, but so far it's nothing super crazy, to be honest, and I'm just watching for if the market breaks the low of the day. If the market doesn't break the low of the day, then I'm pretty much good to ride this trade. If it does break the low of the day, then I got to consider getting out of the trade. So this is my thought process right now. I also know that J&J could potentially test this support level at 160. So that's also going to be kind of my stop right now. But I like the volume, I like the relative strength early on, and I like this pattern, right? Strong move up, kind of this L or this inverted L formation, I should say. We get a strong move and it just compresses and holds, 80% of that move. Sideways motion, unable to, sellers are unable to drive down the price. So market starts to creep lower, and at this junction, I'm thinking, all right, I mean, it's still looking pretty good here. We got some tails above bodies. This move is a little bit more organized than we saw yesterday, but I'm still leading on this low of the day here, and I know that we're at this AVWAP level that I mentioned earlier in the video, so we need to see that break. Now this stock is coming down, moving up, coming down, moving up. And then we actually get the break of the low of the day over here. And now I'm thinking, all right, well, hey, this is looking like a decent move. Let's see if we get any snapback over here in the range. And we get this, we're kind of holding the level. We get this long red candle at 1040. And this is the stock at 1040. Or sorry, at right over here. So we break the low of the day, we hold it, and we hold it for a couple of candles. And I'm thinking, well, maybe I should scratch out of J&J. Market isn't doing what I thought it's doing. J&J is holding up pretty well, but how much time do I have? Kind of looks like it's also rounding out. So I'm thinking that, all right, well, this is looking pretty strong. I don't have any reason to bail on it right now, but I'm going to keep an eye on it over here. And I'm certainly quite bearish in the market. So if I have a chance to take profits on this guy, I'm going to take some profits and start to look to the short side. So market long ran to the high of the day. J&J, surprisingly, massive divergence. Huge, long green candle closing on its high. I take gains at 161.47 and entered at 160.66 just to start a position over here. And I'm thinking, all right, well, I got a great exit on this guy considering I got the market completely wrong, making a new low of the day. And looks like a nice place to take some gains. It's still holding up pretty well. Market's moving up higher. J&J is kind of flattening out over here. So happy to take gains on a day where I got the market wrong, and now I'm shifting to the bearish side. So that's J&J. Now, I'm shifting to the bearish side over here. I'm saying, all right, well, what can I do in terms of some shorts? And I go back to my good friend Carvana because I got an alert that I had set the day before. So we got this long red candle. I took gains over here the prior day. Carvana bounced, ended up testing that SMA, and then we had a bounce for the rest of the day. Today came in, blam, 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 whacked it down, new low of the day. So I got my alert that triggered somewhere over here at 11:15. Now, I didn't see the alert right away. And I'm saying, all right, this is looking pretty good. And I end up catching Carvana at 11 o'clock. So where is this? Yeah, this 10:55 candle right here. This is where I go short Carvana. And I'm basically doing the same exact trade from the day before, where stock has made a strong move, kind of compressing at the low of the day, looking for a quick move, test the SMA. I'll take my gains on that test. That's all I'm really looking for. So I take the Lotto CDS, I take the 230, 227 Lotto PDS for 55 cents. As a beautiful risk reward on that play when I took it. Now the SMA 100 was kind of in the way here at 228, but I wasn't super worried because if it touches that, I don't need it to get to my short strike for me to make a really nice profit. If it touches there, I knew I could probably get, over 100% on that trade. So I was very happy with structuring like that. And I like having it out of the money because it's a little bit cheaper. And my time horizon is quite short. So why did I decide to enter here? Well, here's the stock at 10:55. And I took it at the close over here. Here's the market at 10:55. Market is bouncing. Stock is making a new low of the day, hugging the low of the day. So pretty much same pattern as yesterday. And I can take the short here. So we inch down a little bit lower, and then we poke close to this SMA, right? And then we start to rally up. And if you're kind of, a nervous now, you might be thinking, oh man, I should have taken profits here. I'm second guessing myself. Hari called out my PDS. He was right, blah, 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 blah. And from what I saw yesterday, we got this poke lower, we got a bounce, and then we ended up testing that level later. So I knew that, all right, this bounce, I knew a couple things as the market's going up here. One, we're probably going to test the SMA. I was probably 90% sure that we were going to test the SMA because I had the market tailwind on my side, I had the stock tailwind on my side, and this was keeping its relative weakness over here with lots of tiny bodied candles. So we're moving up over here, and then we start to see it flatten out and start to drop. And when the stock started to drop and we got this long red candle here that poked through the SMA, I had an order out for $1.25, and I took gains on that order. So I took a nice 125%, 127% on the Carvana PDS. So like the trade, again, this was kind of a small hit and run. I knew that we're going to test this level. Felt it was very likely given the price action. It was a natural target, and I had a market tailwind on my side. So quick, get in, get out sort of trade. The other trade I took was SPY short. I took a bigger size here. So the trade I took over yesterday was just 15 shares. So it took a small win on that. This was 25 shares at 606.60. So I got it in somewhere over here. I really wanted to get in over here at 607, but I just missed my entry on that candle. Actually, I guess I would have ended up getting it over here. But took SPY short over here and expecting a move that would probably get through the low of the day, but at least most likely test it. Very close to VWAP as support over here. Market made a new low of the day over here. We got the sell signal. And I ended up taking gains into strength at this 404, the 604.60 candle. And the reason I did that was because SPY had a whole bunch of VWAPs at this level coming up over here. So I thought, all right, well, we tested over here. This price action is looking decent. I don't know if we're going to break through it or not. We might not. So maybe I'll just take some gains here and call it a day. Now, in hindsight, ended up being the wrong move because it would have been more profitable to take gains later in the day and trust this price action. So still not sure. I don't blame my exit. And funny enough, actually, I wasn't even looking at the one option chat, but my entry and exit pretty much ended up matching Pete's. Now Pete averaged to his, so he ended up milking more on that one from the average, but took a nice one on SPY here. 25 shares, $2 a share, so nice $50 on that one. But we got this nice steady price action here. And I also saw that you might think, all right, well, we got this nice steady action, and you see this little bearish hammer over here. When the candles are this organized, this bearish hammer is not going to be at the end of the trend. It's too weak, right? This is a very strong trend, and it's going to probably turn into a bearish channel, bearish channel, bearish channel, bearish channel, and then selling climax over here that coincides with some actual support, and it's made a pretty big move to that level. So it's more likely that this level is going to hold versus here where it's made a move, but it hasn't been this big. The meat of the move was actually this break through the AV WAPs. So kind of unsure what to do here, right? In hindsight, as you're thinking, oh man, I wish I should have held it. I wish I could have, well, maybe I should have known that these would have broken and stayed broken at these levels. At the same time, if it bounced, I would have been thinking, oh man, well, it bounced, really sniped the low on that one. Thank God I use AV WAPs. Sometimes they'll break, sometimes they won't break. The interesting thing I've noticed is that when they do break, they won't always retest immediately. Price will move around them. So if the market gaps up tomorrow, it might find resistance at these AV WAPs. But we can break through them intraday, and it's not going to be a snapback and an immediate test like an SMA. But they are significant. You can see how these levels gap down over here, found some support, broke through that AV WAP over here. So yeah, I mean, for like strong price action, you're going to break through a lot of these AV WAPs, and you're probably not going to be retesting them on the same day. That's kind of my takeaway from this. Just kind of really lead into that price action even more. Okay, so we had this trade setting up today, and I was looking for some stuff both on the long and the short side, but ended up getting back into J&J on a lotto, and I took it at $12.50. So I took it right here. I took the 162.50 lotto for 10 cents, and then here was the market at $12.50. It was right over here, and I'm basically thinking here, all right, well, look, we got this 1OP bullish cross. We're at a VWAP. Might see a little tiny bounce here. Maybe we'll test the prior day low, and we'll get that next leg lower. J&J holding up super well on this drop, poking to a new all-time high. It's just kind of knocking on the door here. So why not take a little short lotto? 10 cents, pretty cheap. Not a lot of risk on this guy. We get some follow through. And I take my gains. I take 30 cents. So I take 200% on this lotto on this pop-up over here at 115, which I believe, yep, coincides with this candle here. So see how it's market's selling off here. This stock is compressing. As soon as the market puts in a little bit, this is not even a crazy bullish hammer. It puts in a bullish hammer here. This stock pops up super, super hard. Awesome. Awesome long. It was interesting because there were some good longs in healthcare, some very strong divergences in healthcare, a lot of risk off that I saw in the market where money was pouring into these sectors, pouring out of industrials. Tech was kind of so-so, but industrials were really taking a hit. And the other trade I took was UNH. Now, this is not really a textbook setup, but again, it's a gap fill reversal trade that I take. UNH, big breakdown here, and need to see it kind of rally up, gain some relative strength on very heavy volume. So coming in early in the day, I see this stock, and I set my alert for a couple things. So the first thing I like is we see this long green bar over here, and we poke into the gap, come back and test VWAP. So it's looking good early in the day, and I know that healthcare is strong, but we've had a really big move down. It's going to take a while for the gains on this stock to digest. So I think I set an alert like somewhere, I don't know, maybe on the high of this candle if that breaks. Set a couple alert lines. I'd set one that had broken through here, and that broke through. Then I set one that was kind of coming through here. That one broke through, but set a couple of these alert lines throughout the day just to keep me appraised of what the stock is doing. And I believe it got breached over here, this 1250 candle, which is where I went long. And my target was to take gains at the high of the day. So I went long, took a couple shares here at 460.65, and I took strength at 466. We had a very strong move up. One thing I regret is I probably had a chance to add to this trade at 12. I think I took it at 1250. So this is like pretty much completely ignoring the market. And where is this? Yeah, here's the 1250. Yep. So here's the setup on this. And this is just me knowing that this setup is very, very powerful. I'm very close to a lot of support here. And if it moves down it and I take the loss, that's fine. But very strong price action. Powerful divergence over here. And I end up taking my gains on this candle at around 110. Or sorry, at 1 o'clock. Exit pretty quickly into profits. So I think I had a chance to maybe add to the position over here. I take gains over here. That's the only thing I should have done. But other than that, pretty nice little trade. And market had a nice sell-off for the rest of the day. Last one I will talk about is the open trade that I have on PLTR. So on Thursday, I took a swing trade. I took the CDS that expires this week, 228, the 106 110 CDS for $1.75, or sorry, $1.71. And the plan was, all right, I think on Thursday I thought the market was probably going to be pretty dead until NVIDIA. This stock is strong. It is right at the AVWAP from the prior day, but I'm not crazy worried about that. I like this move at support here, and I think we have a nice chance to test the AVWAP from the all-time high, which kind of comes around this 1010 level. So that's the move I was looking for. Now, market has a pretty decent bearish trend day, or pretty strong bearish trend day, I should say. Decent is underselling it. This stock holds up really, really well. You can see how it holds that $100 support, and it's struggling to get pulled down by the market. Really struggling over here. So ton of relative strength in this guy. On a pop, I think it has a chance to get back up to 109 and 110, and I can take my profits there. Because it's a CDS, the longer I hold it and then it comes back into profit, the more profit potential I get. So I'm glad I took it for next week and not one day, because I wanted to give myself more time on this. And I figured if the market did pull back, I would have a chance to withstand it, or the stock pulled back and had to test some support, I would have had a chance to withstand it and then scale or take profits on the next leg higher. So that was all my trades this week. I have one open position in PLTR, but pretty nice week overall. We had a nice trend day on Friday that I think a lot of people took advantage of and did pretty well. I think a couple things to take away from this. First is, one, this heavy volume through a VWAPs. We're probably going to chew through it, and we're probably not going to retest it right away. If it was a weak poke, weak bounce, we don't really break through. We kind of linger around here, right? Even here, we linger around here, so there's not a lot of snapbacks over here. Second thing is that I did adjust my bias, I think, maybe a little quickly. I think I should have given this a little more chance to try to break down over here versus flipping to neutral on this candle. stick with it for a couple more bars, and as if we don't start to get through over here, then now over here is when I start to take bias. Not 11:05, but maybe about 45 to 50 minutes later is when I start to get a little more neutral, and then even more bullish. Ended up being right over here, but in this case, right, I flipped a little early. We still had a huge leg lower on this guy that I could have ridden to the trades. There's a couple of trades where I could have added a little bit over here, or on the AGI long. I took the risk on the high plus trend lines, ended up getting that one wrong. So a couple of small things here and there, but I think I view them as some minor inaccuracies and nothing more than that. I think the biggest thing I'm proud of is not really the wins or any profit I made this week, but the fact that my activity matched the more higher volume, or it's just some activity days here. Even this day, it wasn't anything crazy RVol-wise, but we had a nice movement earlier in the day, and we had a chance to make some money here. Versus these 2 days, I closed a position here. I took a very tiny position that I immediately scratched out of because I missed something, and that was it. I had no activity here, and pretty much all my trades came in on the back half of this week. So that's it for this video. Hope you guys found this helpful. I think we should have some good trading this week, given that we got some action on this bearish trend day. We'll see if it's a day of rest, if we get a gap down and a snapback, or if we get a gap up and then another retest of the 50 that starts to break through. That's kind of watching for here, but I think it should be a good week of trading ahead for some day trades, potentially even some overnight swings if we get a pretty wimpy gap up. Thanks for watching, everyone, and I will see you all in the next weekly trading review.